Hello everyone and welcome to this week's webinar. Our webinar this week is based on pending orders. We're going to be discussing everything you need to know about pending orders when you set them. Okay? Now a lot of us don't really have all the time in the day to be in front of our PCs waiting for a certain market movement to happen that we know is about to happen, but we just don't know when. Alright, and a lot of us don't have the time to be seated there waiting for it to happen in order to be able to place a trade. It would be good for you to be able to place a trade in anticipation of a certain movement in a certain direction at some point in the day without having to constantly check your platform or check the charts. So what pending orders are exactly that. There are different types of orders that you can place in anticipation of something to happen. Now remember, Trader's Compass, which we discussed last week, also gives you prompts like telling you to expect a lot of volatility in the euro at a certain time of the day, or in the Canadian dollar like it said this week, and in the pound. And so you will find that there are a few hints that you get from your research report provided by the Gold Apprentice, or from the Trader's Compass, or from any source that you might use that you find reliable. You'll get these prompts telling you at a certain time of the day you should expect this much movement, or so on and so forth, and you want to be able to set orders that execute at the time that is convenient or that is sensible. Okay, so we're just going to jump into it. Now what you'll find is there are 4 types of pending orders. Now if you've ever wondered when you click the new order window, if you've ever wondered about that type part where it says market execution, most of us don't even change that or even look underneath the drop down. But if you click there, you'll be able to see you can place a pending order. Okay, so let me just place a volume of something, of anything. There we go. Now our sell and buy buttons are operational. We're going to click on pending order. Then it now gives us 4 choices here. Okay, so I'm going to take a couple of steps back. First of all, I want you to notice that we have a buy limit and a sell limit, a buy stop and a sell stop. Okay, so we're going to take a step out. We're going to come back to our platform, to our chart rather. Okay, so here we're looking at the pound versus the US dollar. A buy limit will be a pending order that you place at a certain price that hasn't been reached yet. Okay, so all the pending orders are being set at a price that you haven't reached yet. So a buy stop is a price below the market price. Okay, so let's come to here where we are now. We can see that there's a blue candle being formed. But if I'm under the impression that it's still going to drop a little bit more before it actually goes significantly upwards, I would want to set a buy limit pending. Okay, so let's just say this is the price at which I think it's going to drop to and then turn and start going up at. Okay, so I believe at 1.64750 or around that place, once the price drops, because it's right now the price is above that, once the price reaches there or thereabouts, I believe it's going to turn and start going up. So I want to place a pending buy order. Okay, so my pending buy order is there. So once it drops to that point, I believe it will change direction and start going back up. So that's what the buy limit is. It's a pending order where you expect the price to drop to a certain level and then change direction and start climbing, and therefore that's why you want to place a buy. The sell limit is the same, except it's above the market price, and obviously so, because you expect it to climb to a certain point and then change direction, and therefore you want to place a sell because you believe it's going to climb. Let's just say we believe at this point it's going to, so right now it's creating a blue candle, it's climbing. If it gets to that point, we believe thereabouts it's going to turn and start going down again, so we're placing a sell that's going to be affected at that price. So those are your limits. So your limits change direction. So if you're placing a buy limit, you know that you expect it to drop to a certain point and then turn and go in your favor. Sell limit, you expect it to climb to a certain point and then turn and go in your favor. Okay, fantastic. Now we're going to go for the stops, and you kind of can almost figure out what these ones do. Okay, so now your buy stop will be above the price. Okay, so let's leave it there. So now a blue candle is being created. Now I'm not sure if that's a change of direction for the pound, let's just say. So I believe that if it reaches this price, then it's definitely going to continue to climb. Therefore, I'm going to place a buy stop. So it will climb from where it is now. Once it reaches this price, I'm convinced that if it's gotten that high, it's going to continue to climb, and therefore I want a buy to be placed. But the buy is being placed above the market price, not below, like a buy limit. So your buy limit would be below the price, the buy stop will be above the price. The buy limit will say it's going to drop to this point and then go up, whereas the buy stop says it's going to climb to this point and continue to go up. Okay? In the same breath, you have your sell stop below the price, where you say it's going to fall, and once it reaches this point, it's definitely going to continue falling, and therefore I want a sell limit to be placed. Okay, so what I'm going to do is I'm going to go ahead and place all fall. Now here's a way to remember. So you have your buy limit and your sell stop below the price, right? And then you have your sell limit and your buy stop above the price. Here's a good way to remember what is what, because it kind of gets confusing at some point. If right now I'm hovering below the market price. If I right click, it will tell me under trading that I can place a buy limit and a sell stop. So that almost reminds you that, okay, two of those pending orders have to be placed below the price. Which ones are those two? Is it the sell limit? I'm not quite sure. Then you just click below the price, anywhere below the price, click on trading, and then to tell you here below the price you can place a buy limit or a sell stop. Then you're like, okay, good. So now I remember which ones go where. So if it's a sell stop below the price, that means I expect the price to drop to this point and continue to drop. If it's a buy limit, then it will drop to this point and then start rising, because it is, after all, below the price. Now what happens if I click above the price? If I click above the price, now it tells me I can do the opposite. There's my sell limit, there's my buy stop. So now I know if I place a buy above the price, it will reach that price and then continue to climb. That's my anticipation. Therefore my buy stop will be set, or it will climb to a certain point and then change direction and start going down, and that's why I'll place my sell limit. So you can place them from here, but you see here it has a predefined number, so you might not want to go there depending on what you think it is, because roughly where you clicked on the page is where, on the chart is where it is going to expect that's where you want to put your pending order. But either way, you'll be able to modify it afterwards. So if we go to new order, pending order, now I want to set a buy limit. So we know our buy limit's below the price, remember. So let's go with 1.64. Let's just say that's the price at which we expect it to change direction. Okay, so we expect if it drops to 1.64, then it's going to change direction and start going up again. Alright, and in that case we want to place a buy pending. Okay, so now that you've placed that, you can go ahead and place it. There you go. So there's your pending order there, but remember we haven't placed stop loss, we haven't done anything. So now we're going to go ahead and place our stop loss and take profit. Okay, so there we go. Now our volume is set. Alright, we can't change that. So we're going to place a stop loss of, let me say, there we go, and then I'll take profit of, there we go, of 60 pips. Okay, now there's a chance for you to place an expiry time. Let's just say the event that made you place this pending order, the movement that you're anticipating is going to be between 4 and 5 o'clock. Okay, so if it doesn't happen that way, your pending order won't be placed. If that price isn't reached, your pending order won't be placed. Let's just say it just starts going up. It doesn't come down to that point. It just starts going up. You don't want this pending order to be affected maybe 3 days or a week later or a month later when the conditions have changed. So you want to be able to put in an expiry time. Let's just say it's between 4 and 5, so 9 o'clock like we previously said. Okay, modify. And then it's modified and it's placed below the fact. So here's your buy limit and it's labeled buy limit. There is the take profit. The stop loss will be below that. There we go. And there's our pending order there. Okay, so depending on the type of pending order that you want to place, you just put in the right price at which you want the trade to be effected. An expiry is optional. As soon as that price is reached, this order will be placed. Alright, another thing that you might find a little bit interesting is the trailing stop. Okay, so let's just say you just placed a trade and your trade is in a positive, and instead of manually moving your stop loss up to follow, let's just say it was a buy, so your stop loss will be moving up to follow your profits, Rather, you can actually have that done automatically. As long as you have the platform open, let's just say you have it open and you're working on something else, it's in the background, you can have a trailing stop follow your profits. So it actually falls a certain number of pips behind. Okay, so let's just say, first of all, we're going to delete this, and then we're going to say here is a price at which we sold. Okay, then I'm going to place another solid line here, which I'm going to actually modify to make it dotted so that we can see the difference. So I'm going to make that dotted. Okay, there we go. Then I'm also going to place another one as my take profit there. Okay, so I place my trade there. There's my stop loss. My trade's been profitable. Alright, it hasn't quite hit my take profit yet, but I want my stop loss to move, because if it goes all the way up, my stop loss will knock me out in a loss like it was supposed to. But then I can move my stop loss to maybe here, so that if it knocks me out if my stop loss knocks me out, I've capped that profit. It's possible to do that. Even more so with a trailing stop. Okay, so what I'm going to do is I'm going to go ahead and effect a trade so that we'll be able to see the trailing stop in action. Alright, so I have a couple of trades running right now on this account. Okay, so we just want to place a trailing stop. So here's a trade, pound. We bought pound here, and pound dropped immensely today. So alright, so you right click on the trade, you go to trailing stop. So remember, these are points are pipettes, not pips. So we're not looking at 50 pips behind, we're looking at 5 pips behind. Okay, so if you had to quantify this, I'm running a profit at the moment. I put in a trailing stop of, let's just say, 8.5 pips in this case. Then that means every time my profit goes up by 8.5 pips, my stop loss comes up by 8.5 pips. So it actually trails my profit to a point where as my profit increases, my stop loss comes up, and so it caps an amount of profit. Okay, so if I put a 10 pip, let's just say, trailing stop, you see a T gets put on the trade that I've placed. So the trade before looked like this, my order icon looked like this, but as soon as I put a trailing stop, there was a T added there just so that we know that the trailing stop has been effected on that. So as it follows your profits, okay, let's just say you're trading, it's going good, you entered at, let's just say, at this point, so we're gonna grab one of these, that's the point at which you entered. Or even we can actually just, there we go. So you entered there, this is profit, you've got your trailing stop happening. Alright, it's busy following your profit. So your profits are, well, there's the actual market price. So your stop loss was here at some point, went up every time by 10 pips, by 10 pips, by 10 pips, and then the price started to come down. Let's just say these haven't been created yet. Let's just say we're on this candle. The price starts to come down. Your trailing stop will not start to fall back. It'll stay there. So that once the price meets your new stop loss, you'll be stopped out in this profit. You see what I mean? Okay? So the only hang-ups that we have with the trailing stop are just a couple of things. Number one, your platform has to be open the entire time unless you have VTS. If you have VTS, which is a program that you can actually put in your platform that allows the trailing stop to be effected even when you're logged off the system, then you can do that. But if you don't have VTS, then whenever you shut down your MT4 platform, your regular stop loss becomes the stop loss, or wherever your stop loss is now becomes the stop loss. It doesn't trail anymore. Okay, and also another thing is some people tend to think, why don't I just close my trade here instead of waiting to lose this until it hits my stop loss? So it just depends on what you like. Okay, but that's basically it. That's your trailing stop. Those are your pending orders. If you have any questions, you can always email us at support@acmgold.co.za. My name is Hannah, and thank you so much for watching.